Alright, what stops most traders from becoming profitable is their beliefs. And today I'm going to give you some questions that you need to ask yourself. These questions will help you identify some belief that is against your profitability in the market. Welcome back to this channel. My name is Sammy Trade. If you are seeing me for the first time, you can call me Sammy Trade or you can call me SMT. Alright, today I'm teaching you two things. First one is the journey to becoming a successful trader, and then the second one is questions you need to ask yourself as a trader. All right, and if you stick around to this video till the end, you will get to see a trade that is already playing out. All right, I'm going to review how I entered that particular trade so you can know how to enter your own trade and trade with precision. All right, so stick around till the end. All right, firstly, I'm going to talk about competition. Ask yourself, what do you believe about competition? Alright, your answer is going to define who you are actually and why you are not profitable. Alright, because nobody knows you more than you know yourself. Alright, you know yourself more than anyone else. So you can tell yourself the truth. Alright, be real to yourself. Don't sugarcoat anything. Just ask yourself this question: what do you believe about competition? Ask yourself this question. And then secondly, ask yourself, what do you believe about taking or snatching money from other traders as a result of your superior trading skill? Alright, ask yourself this question, because one thing you should understand is that for you to be profitable, you need to see what other traders are doing and then do something different from other retail traders. Alright, you need to be able to see where other traders are placing their stop losses and then identify that place as your liquidity point and then take your entry after they have been liquidated. So other traders are being liquidated while you are making money on the other hand. I don't know if you're understanding me. So you are making money from other traders. So you are somehow taking their money because their money is used as liquidity, which is their stop losses. The stop losses are liquidity and you are making money from the liquidity. So you are somehow making their money. Alright, so what do you believe about taking or snatching money from other retail traders as a result of your own superior trading skill? Alright, ask yourself this question and then give yourself a good answer. Alright, I'm not going to answer them for you, right? I'm not you. You know yourself more than me. Alright, I know myself more than you. Alright, so do yourself good and then answer the question and be truthful to yourself. Alright, and then thirdly, ask yourself, what do you believe about losses? Alright, this one is very, very important because this is what differentiates the rich from the poor. Alright, what do you believe? What do you believe about losses? Alright, what do you believe about losses? Because one thing is that losses is something you can't avoid. Alright, you can't avoid losing in the market, but you can only control what you think about the losses. Alright, you can lose, but how do you think when you lose? Because for me, when I lose, I learn. And then when I make money from the market, I look for how I can repeat that again and then make another money. So when you lose, you learn from your losses. That is for me. I don't know about you. That's why I say be truthful to yourself. How do you see losses? What do you think about losses? Do you get angry? Do you greedy when you lose, or somehow? Do you revenge trade after losing? Ask yourself this question. What do you think about losses? How do you react when you lose? When you lose money in the market, do you blame the market or do you blame yourself? Or do you blame your strategy? Or do you blame people around you? Ask yourself this question, because one thing you should understand is that if you are blaming people around you, the easier way you can make it, the easier way you can speak to yourself and understand yourself is when you are blaming yourself. It's more easier when you are blaming yourself. You just work on yourself. But when you are blaming people around you, when you are blaming the world, how can you correct the world? How can you work on the world? You can't work on people around you. You can't tell them to change. And they can't change because of you. Alright, you can only work on yourself and then change for yourself. Alright, and become a better person. So stop blaming people around you if you are doing that and start blaming yourself. Try to always get better each and every day. These are the questions you should ask yourself before entering for any particular trade at all. Alright, firstly, ask yourself, what kind of price movements will sustain the buyers and the sellers for them to believe that they will make money from today's market movement? Alright, ask yourself, what kind of movement, what kind of price movement will sustain the buyers or the sellers for them to believe that, oh, I'm going to make money from today's market movements? Then secondly, ask yourself this question. Alright, let's take for example, you are selling in the market. In today's market, you are selling. Ask yourself, when are sellers likely to come into the market if you are selling? And then if you are buying, ask yourself, when are buyers likely to come into the market? Now, don't forget that you will also think of the side you will set your TP, you will set your take profits, where you are placing your take profits. So as you are selling, for example, ask yourself, when are sellers likely to come into the market? And then when are buyers likely to come into the market? So you set your take profits at that point, so you can get out of the market before buyers comes into the market and then push the price upward because you are selling. All right, but then again, on the other hand, if you are buying, you should ask yourself, when are buyers likely to come into the market? And then you ask yourself, when are sellers likely to come into the market? And then set your take profit at that same point, so that when sellers comes into the market, you're already out. All right, you're already out. In relation, ask yourself this question. Let's take, for example, also you are selling. Ask yourself, when are old buyers likely to lose faith on their current position and then get out of the market? Ask yourself this question. And then if you are buying, ask yourself, when are old sellers likely to lose faith on their current position and then leave the market also? All right, ask yourself this question. All right, if you are selling, ask yourself, what needs to happen for sellers to come into the market, for new sellers to come into the market? And then if you are buying, ask yourself, what needs to happen for new buyers to come into the market? Ask yourself this question before you enter into the trade, because as we all know, you need liquidity for the markets to be able to move properly and as fast as you want. All right, so you need enough liquidity to move the market. All right, so ask yourself this question. Now we move to the next phase, which says steps to become a successful trader. If there is one particular thing you should tell yourself, that should be, you can't physically control the market. All right, you can't physically control the market. You can only try your best to control your perception of the market, how you think of the market, how you perceive the market, how you see the market. All right, how you see the market, because many other retail traders, for example, can be seeing the market as a threat to them because of their previous experience. All right, because of their past experience, but you can be seeing the market as an opportunity. All right, I'm being positive here. All right, if I want to be sarcastic, I will say you also can see the market as a threat because of your previous experience. All right, you can't really tell if you are seeing the market as an opportunity. That is why it's important you should speak to yourself. All right, talk to your heart and then ask yourself, how do you see the market? How do you perceive the market? Do you perceive the market as a threat or as an opportunity? All right, so there's how you see a setup that has already played out before, but you lost money with that setup, and then you refuse to learn what made you lost money, and now you refuse to enter the trade because you saw that setup, and then the trade would play out, and now you'll be blaming the market. Why? Because you lost money the previous time you entered for that same particular setup, but then you forgot to read the things or learn the things that made you lose money. It can be so small. The thing that made you lose money can be so small, but you refuse to learn that thing, and then when you see the setup again, you refuse to enter because of your previous experience. So you see, these things can be complicated sometimes. All right, so make sure you don't see the market as a threat. All right, see the market as an opportunity. The more depressed and sophisticated you become as a trader, the more you will come to realize that trading is 80% mental. All right, it is never you against the market. All right, it is you versus you. You are the biggest enemy to yourself and to your trading accounts. Just like I said, it will never be you against the world. All right, it is you against yourself. How you see the world, how you perceive the world. Try to control these things and not to control the world or people around you, because you can't control anybody around you. You can't control people around you. You can't tell them how to behave. You can't tell them how to act, but you can only control yourself. Tell yourself how to act and how to think towards the way other people act. Remember, you will need self-trust as a trader, and for you to gain this self-trust, you need to establish some set of rules and guidelines. All right, you will always follow these guidelines regardless of your previous trading experience. All right, and regardless of the temptation to do otherwise, you will always follow these rules and these guidelines. All right, in order for you to gain that self-trust. All right, so forget about your previous trading experience, like I have always said. All right, and then focus on what's in front of you, and then follow your rules and your guidelines. I want you to understand that money will always be a byproduct of what you know and how well you act on what you know, because trading is more of an exercise. All right, you are always learning how to trade, and then learning how to be disciplined, and then learning how to execute your trade flawlessly. which I call flawless execution. All right, so all these things are more of exercise. All right, now let's dive into technical analysis. I believe you have been seeing this market structure, this advanced market structure right here. All right, now this is the bullish market structure and this is the bearish market structure. Now market will only go in two ways. All right, it's either market will go bullish or go bearish or go sideways, but I don't really consider that sideways because I don't trade sideways, because I call it consolidation. I don't trade when the market is consolidating. I can only trade the bullish market or the bearish market. All right, now I'm going to make this teaching very brief. All right, if you can look at this chart now and see this ongoing trade, you understand that this is clearly a supply and demand trade. All right, this is the supply and demand trade, and as you can see on this particular trade, we are making use of demand because price is bullish. All right, you can only make use of supply when price is bearish, and then when price is bullish you make use of demand. All right, so this is a demand trade. First, take a look at this trade. All right, clearly you can see that this is a demand zone right here, and then this is also a demand zone. Now in a situation whereby you have two demand zones, you have to pay attention on what price is doing at each particular demand zone. Firstly, the first demand zone and then the second demand zone. Now these are the criteria you should check out. Firstly, is the demand zone giving you an order block? And what is an order block? All right, if you know nothing about order block, you should check my video that I did about order block. All right, order block are the last candle before an inefficiency or before a fair value gap. All right, or before a liquidity move, a sharp move. That candlestick before that sharp move is called an order block. All right, it's called an order block. Now look at this clearly. All right, let me zoom in. You can see that here we are having an order block. You can see this candlestick before this huge move, this sharp move here. We have an order block, but in this second demand zone we are not having any order block here. There's no order block here, but we have order block here. So I would likely pay attention on this first order block, but remember, you can't tell the market what to do. All right, the market can still blast through this first order block or this first demand zone and then go to this extreme demand zone, which is this right here, as you can see. All right, so price can respect which one it wants to respect. All right, so all you should do is just to look for what price is doing at that point at this demand zone or this demand zone. So firstly, let's look at what price did on this demand zone that made me enter for this trade. All right, clearly, let's do that. Let's go to the 1 hour time frame. As you can see, this is the 4 hour time frame now. Now let's go to 1 hour time frame. All right, 1 hour time frame. We already know that this is the order block on the 4 hour time frame. Now let's see what price is doing at that order block. All right, let me take this out. You can see price is clearly bearish, giving us a break of structure, lower low, lower high, lower low, lower high, and then a lower low right here. All right, now let me show you how I entered for this trade. Let's go to the 15-minute time frame. All right, this is the 15-minute time frame right here. As you can see, change of character. We had a change of character right here, which you can easily see chalk, or other people do say market structure shifts, whichever name you want to call it. All right, so this is a change of character right here. So after this change of character, you expect a pullback. All right, on the 15-minute time frame, I'm showing you this. So I'm expecting a pullback. Where will price pullback? Right, if you can check properly, you see that there's an order block at this 15-minute demand zone right here. There's an order block right here. So you wait for price to retrace to that order block or that demand zone also, and also wait for another change of character. You can take aggressive entry because you already get a change of character on the 15-minute time frame. All right, which is this change of character, and now price has pulled back, so you can enter for your trade easily, or you can use a candlestick confirmation to enter for your trade. Probably if you see a rejection candlestick or a morning star, you can take your trade. All right, but then again, it's more importantly, it is more okay for newbies to wait for another confirmation. All right, but you can also take aggressive entry, which I did from here. I picked this trade from this point, and then we had another change of character right here. We had another change of character right here. I don't know if you can see this properly. All right, let me think I should take this out so you can see this properly. All right, we had another change of character right here. If you can see clearly, we had this change of character right here, and then price put back, and then you can enter also at this other block, just like I marked out right here. You can see this other block before this inefficiency, before this sharp move. You enter, you wait for this other block for price to tap into it, and then you enter at this other block, and then you pick your trade from there. All right, as simple as that. Trade. So you can see, I hope you understand something from just this analysis that I did right here. All right, it's clearly simple, just very simple, just supply and demand. When price is bullish, you trade with your demand, and then when price is bearish, you trade with your supply. All right, as you can see, the price is progressively and going to my TP. All right, those of you that enter for this trade also, because the trade is still playing out, so there are other traders still picking this trade here. So this is something I should show you also. All right, this is something you should know. All right, anytime you are entering for this trade, any trade like this, your TP should be at the top right here, because these trend lines are retail traders trying to sell at this trend line. All right, because there are trend line traders trying to pick the trade from this point, from this point, from this point. So their stop losses is at the top of all these points. So price will definitely or eventually clear out all this trend line right here and then hit your TP. As simple as that. All right, so this is how you trade using supply and demand. All right, I'm just showing you supply and demand, and also you can mark out your inducement level. All right, your inducement must be close to your point of interest. As you can see, this is my inducement right here. I call this my inducement. As you can see, this is only inducement close to my point of interest. All right, you can easily say IDM. All right, this is the inducement close to my point of interest. All right, so inducement and then your point of interest, and then you wait for confirmation, and then you take your trade from that point. All right, remember the confirmation can be a candlestick or a change of character. Candlestick is aggressive, and then change of character, yeah, conservative, and then you pick your trade from there, and then you swing to the upside, or you can just target 1:3 or 1:4, depending on how you want to trade. All right, so I hope you understand something from this video. Remember, don't forget, my name is Sammy Trade, or you can call me SMT. All right, if you want to see more of these videos, you can subscribe to this YouTube channel so you can always see more of these videos, or check out my old videos if you want to learn more about trading and trading psychology. All right, and happy trading day and happy trading week.